Surprise, surprise, we live in an attention economy, and nowhere is this more clear than in crypto. The more eyeballs we have on a particular asset, the higher the price can go. And Pudgy Penguins, or the Pengu token, does have a lot of attention. And this concept even works beyond just individual cryptocurrencies. I've published a lot of videos on Pudgy Penguins on this channel, and one of the reasons is simply attention. Here are the last two videos. This one outperformed the average video by roughly 2x. Here's another video that outperformed by 2.4x. So there's way more views on Pudgy Penguins videos. And attention monetizes. That's not just true for social media, it's also true for crypto trading. Now, Pudgy Penguins is among the golden 3 Solana meme coins. So that's Bonk, Pengu, and the official Trump token. All of those meme coins are above 2 billion in market cap, and then follows a somewhat steep cliff. It appears as if there's some kind of invisible ceiling of how large a meme coin on Solana can grow. Because here's the thing, while attention does drive prices, market manipulation and the big money by the market makers and by the centralized exchanges also moves the price. And they don't want to necessarily move the price of a random meme coin to $100 billion, right? They also just have a limited budget to speculate with. For example, have a look at Fartcoin over time. This is a market cap chart, not a price chart. And that market cap peaked in January of this year at $2.1 billion. Then have a look at the historical market cap of Bonk. That peaked at roughly $4 billion. Dog with Head peaked at 4.6 billion, Popcat at 2 billion. The official Trump token had a massive launch, so that peaked at 8.8 billion. Everybody was talking about that meme coin when it launched, not just the people close to crypto. And Pudgy Penguins right now is at 2.3 billion, and it peaked prior at 2.7 billion. So this gives us an area to play with, right? It's very unlikely that Pudgy Penguins will go above the historical height of the Trump token. It's unlikely that it's going to be at 8 billion. Maybe it can reach 4 billion, but it's unlikely going to go way above that. And so then we have to ask ourselves the question, right? Does it make sense to buy and potentially even hold Pengu long term? Is the upside still high enough to justify the risk? Because in the end, meme coin trading is all about player versus player. The capital concentrates towards a few players, and the vast majority of people tend to lose money. If a meme coin is already that large that it cannot do another 5 or 10x from here in the short term, if it can only grow if Bitcoin doubles and triples, and if it can't really outperform that much anymore, is that idiosyncratic risk of the individual altcoin, of the individual meme coin specifically, worth it? Because here's the thing, this is the altcoin market cap relative to Bitcoin. In the last 2.5 years, this went down quite a bit. Here is the altcoin market cap relative to Solana. That went down even more. Now, I try to be as transparent as possible on this channel. So I never buy a cryptocurrency and then promote it later on this channel. I always discuss a cryptocurrency first here after potentially opening a position. And after the last video where I was quite bearish, where I was quite negative on Pudgy Penguins, I did open a position. I was betting on falling prices of Pengu. What we see over here is Pengu relative to Solana. And again, that is very close to its all-time high. And we saw our secondary short squeeze just recently. And I entered my position over here. I then took some profit after Pengu lost versus Solana by roughly 9%. And now I keep the rest running, roughly half of the position. And here's the proof that I'm not just bullshitting. This is the Gerhard Trade channel. This is a Telegram channel that's part of the premium membership of this channel. So I'm entering a relative valuation short of Pengu to Solana. And then over here is where I closed half of that short. Usually I don't share those trades here officially on YouTube, but I'm making an exception this time because I'm talking about Pengu so often that I do feel the obligation to be somewhat transparent with my trades. In the last video, we already talked about how Pudgy Penguins and Bonk have a lot of similarities. Both of them got launched via a lot of centralized exchanges at the same time. Both of them have token inflation, which is not very common for meme coins. And both of them do get artificial manipulation by the perpetual futures regularly. So here's Pudgy Penguins. Currently, the supply is steady, but starting at the beginning of next year, we do see unlocks for the founders and for the project supporters. With Bonk, we saw a similarly aggressive unlock. Again, the early contributors or the team got tokens. The big difference was that for Bonk, the unlocks happened pretty much immediately. For Pudgy Penguins, the team waited for a while. But yeah, everything screams that this is a professional setup. This is not just an organically grown meme coin like SPX 6900, for example. Just have a look at how nicely the website is made, how there are animations everywhere, how this is nice and inviting, and how everybody might get lured into buying the token. And now compare this to Pudgy Penguins. It's really not that different. It's a very much professionally made, animation-rich website. The way the tokens are traded is also very similar. So we've got pretty much all of the trading volume on the centralized exchanges, not directly on the Solana chain. But while for Bonk, there's only around 200 million of trading volume on the spot market, we can ignore FameX because that data is not reliable. On the perpetual futures market, we've got more trading volume, so 334 million. And that's on MaxC. The same is true for Pudgy Penguins. So over here, in the last 24 hours, we saw $250 million worth of spot trading volume, but on the perpetual futures, we have 740 million. So really, it's the levered bets on the price that move the spot market. Or it's the moving tail that determines the direction of the dog. Just have a look at how this developed with Bonk. This is now the open interest in green, right? So how many bets are currently on the Bonk price? And then compare this with the Bonk spot market price. When there's a lot of attention and a lot of short-term levered capital through the perpetual futures market in the asset, the spot price goes up massively. When then the open interest declines, the Bonk price went down as well. And this happened several times, and currently again there is a lot of speculation in Bonk, but we might turn around yet again. And now compare this with Pudgy Penguins. Here we're still going up, and the question is how much higher can that open interest go? How much more short-term leverage will there be in the Pengu price? Currently we are at 600 million, and yes, another 2x is possible, but then Pengu would reach a market cap of maybe 4 to 5 billion, and that's very likely the absolute top of how much the manipulators are willing to push a price like this. I'm already fairly bearish on Pudgy Penguins. If I get stopped out with the remainder of my short position, that's fine with me. I simply wait until the price rises further. And if the market cap reaches 4 or 5 billion, I will double down on the short, because then we're likely going to see a deflation similar to what we have seen with Bonk, similarly to what we've also seen with Dogecoin, for example. This is short-term leverage. This is market manipulation that is pushing up Pengu, but at the same time, we do have some attention on the price. And I simply hope that all of those retail investors that simply just buy and hold the meme coin, that might buy it now and want to hold it maybe over the next 3, 4, 5 years, that they don't get burned in this player versus player game. Now, this market is great for some, but not so great for others. People that bought Bitcoin, they're close to all-time highs. But most people that have a diversified altcoin portfolio are actually down. Because here's the problem. Returns tend to concentrate in just a few assets. Yes, there are a few outliers that do outperform Bitcoin, but the vast majority, especially of the smaller altcoins, they tend to do much worse. The altcoin market as a whole, since the beginning of 2022, so in the last 3.5 years, underperformed Bitcoin by 74%. And that's just a comparison of market caps. It's not the comparison of prices, because that's even worse. Because the altcoins tend to have an expanding supply in terms of tokens, and that expansion in supply tends to depress prices even more. Have a look at this here. This is my favorite example. This is Balancer relative to Ethereum. That's just on a linear scale, but on a logarithmic scale, it looks very similar. We just have continued underperformance. And the reason for that is simply more and more tokens hitting the market. Either the insiders are selling, the team is selling, the early investors are selling, the users of the platform are selling, maybe because they get some incentive token that they can then distribute. It's all kinds of stakeholders that tend to get tokens over time. And this is not just true for Balancer, this is true for the majority of altcoins that tend to do worse than Bitcoin. And so we can actually flip this around. Instead of buying the altcoins, instead of trying to find the needle in the haystack, the one altcoin that does better, we can flip this around. We can bet on most altcoins underperform Bitcoin. Have a look at this. This is Bitcoin relative to Balancer. So we go long Bitcoin, Ethereum and Solana, and we go short the bad altcoins. Then we can get performance like this. A very nice constant growth chart that is backed not just by hype, but by the fundamentals, simply the insiders cashing out. This is going to stay a valid driving force of altcoin prices for a long, long time. I'm actually making money with that strategy already for close to 4 years. So my performance is this line here in black. And if I had just dollar cost averaged into Bitcoin and done nothing else, I would have only gotten the light gray line in performance. So we don't have to get the 10x or 100x altcoins in order to do better than Bitcoin. This relative valuation here, right? It went up in the last year by roughly 300%. And so I did make a slight change in how to approach those relative valuations. In the early days, I was borrowing something like Balancer, right? I would take out a loan in Balancer, denominate it in Balancer, and then I would swap this against something that I'm bullish on, let's say Bitcoin and Ethereum. And I would just play this relative valuation. The issue with borrowing and lending platforms is that we can't add too much leverage and that we can't really manage our risk with stop losses. On top of that, the asset selection that we get with borrowing and lending platforms tends to be rather low. But with perpetual futures, we can trade many more options. And so I started trading perpetual futures with those relative valuation bets myself, and I did this experiment for 2.5 months. And during those 2.5 months, the performance was very impressive. I started with 40K and moved this to close to 60K again, just in 2.5 months. And I'm sharing all of my trades, right? For example, over here, this was a short on Pengu relative to Solana that I then had to close just a few hours afterwards because Pengu just crashed. And our community made good money with that. Now, many people are scared to learn such a strategy because it's more complex than just buying a meme coin, right? We are going long one thing, we are going short another thing. It seems quite complex and it seems like there's risks that are hard to understand. But that's why I created separate tutorial videos on just that topic. You can just watch those tutorial videos and then learn the trading yourself. Now here are a few trades shared by our community, and it's really about risk management. It's really about setting yourself up relative to other altcoins. Now in theory, this looks all good, right? I made money with this, not just short term, but also long term. But the central question is always, will this apply to anybody that's trying to learn the strategy? And I think that's actually possible. What I will do is when you join this membership here, right, the premium membership, I will share my current favorite trade. And if that favorite trade does not lead to profit after 1 month, then I will refund you 100% of the membership fee. The fee is currently $125 per month. The target is that you become a winning player very, very quickly. So while all of those tutorials are useful for the long term, at the very beginning, you just have to watch 2 of them. And that's using perpetual futures on Hyperliquid and risk management with relative valuation bets. After you've watched those 2 videos, I will share my favorite trade. You just execute on that trade based on what you've learned over here. And there's a very good chance that with a chart like this, you will be in profit after a month. Again, we are playing the fundamental dynamics of the market, the token inflation, and the fact that most altcoins underperform Bitcoin, Ethereum, and Solana most of the time. Now, I was thinking about this. How can I make this even safer for the people that don't want to watch the videos, that don't want to set up the trading themselves, that don't want to do the risk management themselves, that simply just want to provide capital? Let's say you've got a lot of capital, but you don't have a lot of time. For those people, I've set up a copy trading capital pool. So you can simply provide money to that pool and then automatically execute any trade that I'm doing as well. The copy trading feature is available for everybody that's on the annual membership. So you're also saving $250 per year on that membership. But the main feature is the automated copy trading where you can get this return. And this has launched 2 weeks ago. And so far we are up 4.7%. And the very first days when I set this up, I didn't yet trade anything. And so that's why there's no trades, why this is going sideways. That's why the APR is actually lower in this estimate than what we're actually achieving. I hope to get this long term above 50%. It was above 50% when I traded myself. Now we are moving more capital, so the APR can decline, but the target is at least 50% per annum. And so you can run the numbers for yourself, whether or not it makes sense for you to join the annual membership for premium. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.